Good morning, everyone. This is the War Room. As you all know, it is a beautiful morning here in the west side of Chicago, February 8th, 2024. For those of you that don't know me, but I'm sure everyone does, I am AgYield's marketing manager and everyone's favorite backup host, especially Nick Fry's Jack Coakley. Filling in for Dan today. It's good to be back on camera. There's about a week there where Dan was like, you're hosting tomorrow. And so I got ready, and then I wasn't hosting tomorrow. So, it's good to have the talent up front again. As always, feel free to jump into the conversation any way you want. You want to ask a question, you want to add your 2 cents to anything we're talking about, you want to compliment me on doing my hair this morning, anything and everything can be part of the conversation. Of course, you can always send us any questions, comments, concerns to info@agyield.com. Let's kick things off today with some of those CONAB numbers, what everyone seems to be talking about this morning. So, Brian, take it from here.
All right. Yeah. Thanks, Jack. Appreciate it. Yeah. Some surprising news coming out of CONAB this morning. Soybean side of things, they cut it from 155.2 to 149.4 based on the weather they've been forecasting there over there. So USDA is only pegged for half that at like 153.15 down from 157 from the Jan WASDE. So that'll be interesting to see what WASDE comes out at 11. On the corn side of things, they also lowered their corn estimates from a 117.6 in CONAB down to a 113.7. So really a kind of a big discrepancy based on what the USDA has pegged it at a 124.32 for this report, down from 127. Also seeing that they actually lowered their second corn crop production numbers from 91.2 down to an 88.1 this month. So interesting to see at 11 how the USDA reacts to these numbers by CONAB.
Great stuff. Anyone want to add on top of that? Any other thoughts to be had there?
Yeah, I think, just to add to that, I think the, CONAB has been below the USDA. Markets, I think, been anticipating the USDA to start cutting closer towards those numbers. So I think the soybean number, little less than 150 is probably not the big shock. I think the corn number, in my opinion, we're sitting at 10 million tons below the government number, almost 11 million tons. So we're getting a pretty big gap there. So it'll be interesting what the USDA says today. I doubt that they make as aggressive cuts as we want, but we've really beaten these markets down pretty relentlessly, as we've all seen. So we're on a $2 plus break in beans, we're on a really big break in corn. Funds keep piling in, spreads have widened, all the kind of things every single day. So maybe any kind of a shock one way or the other could have a relatively large bounce. Whether that turns anything around or not, I don't know. But when everyone's kind of sitting pretty short and kind of giving up hope, even to get back to the basic moving averages would be a pretty nice rally that we would all like at this point.
Yeah, thanks for that, Justin. Another thing on top of everyone's mind really has been, we've been talking a lot about geopolitical, issues that face the world right now. We have some fresh perspective and some new insights from Ben, who seems to be our geopolitical correspondent nowadays. So Ben, take it from here.
I'm no Edward R. Murrow or Walter Cronkite, but interesting. Overnight, it was announced that an anti-war presidential candidate in Russia was barred from running. And that just shows you the difference of how politics run here versus in other places. The hardliners remain in control. As far as the war goes, really just pop shots going back and forth. Ukrainians claiming a victory for shooting down a Russian helicopter. So nothing major. I think a bigger geopolitical issue is there's a meeting in Cairo being attended by Hamas looking for a ceasefire and looking for a swap of prisoners, as well as a massive humanitarian aid effort. And the Israeli response is we are committed to complete victory. So I think that a lot of those meetings and discussions are kind of posturing, trying to throw shade on the other person as not being reasonable. But I think that the Israelis remain committed to whatever their end goal is at this point. So I don't expect that to come out with positive efforts. I will go back to probably 15 years ago. might be longer than that. But there were times when we made some great humanitarian donations, particularly of wheat back there with bags that were stamped from the United States of America. I wouldn't rule something like I'm not trying to get anyone to base their plan on it or give them a sliver of hope that these markets can revert, but it is a way for us to extend positive diplomacy in the world. We have the capacity to do that in corn and wheat. So if anyone's listening in Washington, D.C., this would be a great time for us to spread some positive diplomacy via food to the world. So that has happened in the past. Be nice to see that happen now.
Thanks for that, Ben. I won't claim to be an expert at these things, but I do handle our YouTube timestamps. So I hear a lot about the different categories and topics that we cover. And a lot of it lately has been tough markets. It's been geopolitical concerns. I'll push this out to anyone willing to answer it. What are kind of the silver linings for some of, our growers or growers around the country right now when it comes to trading grain or really just finding a way to operate in this market?
It's an interesting question. Tough one to really kind of hammer down, but I think just the old adage could be true that, low prices kind of cure low prices. You start to kind of find some demand once you beat this thing up enough. And I think that's really what everybody's waiting to see in a lot of these markets. I mean, we did just see Colombia bought 200,000 metric tons of corn this morning. So that was definitely on the positive side of things. So the trade's still going to happen. It's just there's definitely a lot of doom and gloom out there when you go from kind of this big raging bull market to a solid bear market, year over year.
Yeah, so I think you make a great point, Alan. I think we've priced in a lot of negativity. It doesn't mean that we can't continue to grind lower. I do think the market is functioning as it's supposed to. We saw river basis levels go down this week pretty significantly. We saw spreads widen. I think the grower is tired of death by 1,000 cuts with rolling basis contracts, and we're seeing a lot more cash selling and capitulation. And ultimately, I think that's where you have to go in order to find a floor in these markets.
Right, and we are seeing the funds carrying massively, huge short positions here, and we were just talking about it before the war room actually started. Was what if you get something that's actually construed as bullish, or you get these bounces, So I think that's something just that everybody's been waiting for, and obviously, like you said, death by 1,000 cuts, starting to feel a little bit different, kind of going into each week, which is just going to be lower again. It's just going to keep on grinding. There's no good news. There's no demand. There's no support. There's nothing to shake anybody out of these positions right now. So maybe some fresh data, something new will pop up.
I think a lot of the weakness that we've seen in the last 4 or 5 days, people get in front of the Goldman roll, which happens on the 5th through 9th business day of the month. That's when the index fund, which is kind of generally viewed as a hedge against inflation by some really larger funds that have a presence in the commodity markets. They roll their long positions from typically from the front to the next month, but it can go out further than that. It's not ironclad. And that typically sees weakness in spreads. Coupling that with a lot of corn being moved and basis levels shrinking, the market is functioning as it's intended, and hopefully we can find a little bit of traction here somewhere between 420 and where we're sitting today.
Yeah, I was going to add to that people have been trying to be long or bullish because the funds are short for a long time now, and you've really gotten murdered if that was your philosophy. That these guys are wrong. These guys that run $1 billion funds are the idiots in the room. It's an election year, and there's all these things some correlations, years that end in 4 and election years, and any reason, are kind of clasping to turn us around and have a bull market again. So I think, Ben, you said this a long time ago, and it's true. It's, when markets change from multi-year bull markets to bear markets or vice versa, like it's a really tough for people to adapt to that new price level. and I personally think we are at a new price level for a bit, right? We're in the fours. We're not. This isn't a 550 plus type market today. I think it's just been a really tough transition for people. Coming from 6 to 5, and 5 seemed like it skipped from 6 to 4 pretty quick. So, I think all these things that we're hoping we see these signs that we're turning around, people are giving up, but that takes like time and pressure, right? Cheap prices, you wear people out. It costs a lot to store. Interest rates are high. All those things that kind of wear through people. So I do hope that we are starting to get at least to the time of year where, we can't just pretend like we've made next year's crop either, right? We still have to get acres. We still have to grow the safrinha corn crop. I think this CONAB number being 10 below the USDA, maybe there's just a little bit of doubt, in these shorts that have made money every day just being short, right? So hopefully you change the mentality a little bit to where it's just not a no-brainer to be short from, 430 corn.
Yeah, and I think that even with those things that are out there, time and price should always be considered. And today, any sort of a rally, that I don't want to sound redundant, but 8 to 10% in bear markets is typically the extent of what you should get. So the rally is probably not going to be it, or the bounce, the short covering rally is probably not going to be to the extent that most people would want it to be. But one of the hardest things that you can do in these kind of markets is take a little bit of that leap and trade defensively if and when that should materialize. So I agree with you, and I think it would be very, in today's market, the managed money is not really going to exit until they have to, but for them to take this big of a short corn position into South American safrinha crop and the U.S. crop would be somewhat atypical. But it's paid them really well. Options are extremely cheap. When you're talking about the dividend that they're getting paid by being short and rolling a short position, go out and buy thousands and thousands and thousands of calls and say, we'll sit this one out and pay, in one roll, they could cover their position at X price, which has been wildly profitable. I don't know why they wouldn't do that. But it's definitely something to be concerned with, because if they were to sit on this really large short position and for some reason, and I do think that the market will shrug off any negative news on the first few rallies, because I think there will be people there to step into it. But if they were to put it into an environment where they would have to get forced through the wormhole, it could get pretty violent pretty fast. I don't think that's a February 8th type of price action, but the potential there to lose significant profits in a major event could come pretty quick and pretty violently. And so I'm sure they're managing their risk well. People can get sloppy when things get really good for them. I think that's something that anyone's ever traded will tell you. So it'll be interesting to see how they manage this behemoth of a position going into the two major corn crop seasons.
Absolutely. Yeah, good stuff, guys. I appreciate the conversation. I'm going to need a list of these trader adages you guys keep using. Every time we talk, there's always a little massive list of old trader adages. So if anyone has that list, please send it my way. Ryland, let's talk meats.
Yeah, we were a little bit lower here in the cattle complex. Just kind of felt like overall, just markets kind of hitting a little bit of a ceiling right now before we really see any cash trade develop. Last week we were around 178 to 179, so we got a little premium here priced on the board. Looked like maybe we saw some longs just taking some profits. Also, we got the Goldman roll going on, so it seemed like it really wasn't that exciting of a roll just yet, but we got another couple days to digest that. Open interest in the live side was up 1,300 contracts, and was also up 200 in the feeders. So kind of looked like we were getting some new hedging here and new sell pressure overall, just because we're kind of knocking on the door of some of these higher levels. So would expect kind of a choppy trade, for the rest of the week. Typically, we see some pretty big volatile moves during the Goldman roll in the meats. So we just opened up here. We got cattle's up 135 in Feb. Marches are up 137. So we would expect, kind of a sideways up and down trade till we see some better cash news here. But board's anticipating higher prices pretty much across the board.
Excellent. Anyone else got opening numbers?
Yeah, I
Yeah.
can take care of that, Jack.
Go ahead, John.
Or go ahead, Justin.
No, go ahead.
Oh, corn relatively unchanged going in the report at 11 o'clock Central Time. And then you got beans up about a nickel across the board. So we'll see what 11 o'clock Central Time brings. And then, yeah, other than that, wheat's down a dime. And that's dollar's higher again, crude's higher. So we'll just continue to watch the currency of the dollar too.
Thanks for that, John. Again, just a quick personal note. I haven't been here since we broke 100 subscribers, so I just wanted to say thank you. Our goal is to take this to as many people as possible. So if you want to be a part of that, go ahead and hit that subscribe button. We hope to, there's plenty of things going on the YouTube channel. We have testimonials, AgYield testimonials, interviews, and other insights and clips and highlights from the war room itself. So thanks again for all of the people who have subscribed and supported us so far. We can't wait to continue building this thing and really make something special out of it. And it's already special, but it'll be more special. So anyway, any other closing thoughts from anyone before we head out this morning?
All good.
Yep.
All good. Well, thanks again for tuning in, everyone. Again, I'm Jack Coakley, and we'll see you tomorrow morning at 8:15. Have a good one.
Thanks,
Thanks, Jack.